Whether you're buying or selling in 2025, you need to understand both sides of the housing market because smart moves come from knowing the full story. At the moment, inventory is rising, buyer demand is rising, and interest rates are bouncing between 6.5% and 7%. But the one thing that hasn't really changed is affordability, as it continues to remain tougher than ever. But in today's video, we're going to discuss both sides of the equation, whether you're buying a home or whether you're selling a home, so that you know exactly what the other side is thinking, what the other side is doing, so that ultimately you can put yourself in the best position to accomplish your goals. And with that said, we're going to take a look at nationwide, what's happening nationwide, but more specifically, we're going to talk about what's happening here in Orange County, California, because chances are you're watching this video from Orange County. And I often talk about real estate being local, so why do you care what's happening nationwide? You really shouldn't. You should rather focus on what's happening not only in your local market like Orange County, but more specifically like your city, say Huntington Beach. And even there, you can take it a step further and go into price point as well as neighborhood. And that's really how you set yourself up for success. So with that said, I'm going to take 20 years of real estate experience along with what I'm seeing out there currently in the housing market, talking to buyers and sellers, to give you a full market update of what's going on so that ultimately you can make the best decision for yourself. Like you probably know, supply and demand drives market. So as we all know, supply and demand is what drives market. So let's take a minute here and talk about what's happening nationwide, and then we'll boil it down to Orange County. So nationwide, inventory is up 29% year over year. We currently have 656,000 single family homes listed on the market, which is still well below the pre-pandemic levels of where inventory would be currently sitting right now. But again, who cares about the past? You care about what's actually happening in the market at the moment. And with that said, inventory is continuing to increase. Now, last year, the peak in inventory nationwide was just over 739,000 homes. So at the moment, we haven't peaked above where we were last year, but the idea is at the moment, as interest rates continue to stay higher for longer, we're likely going to see inventory continue to grow, which means we're going to rise above that inventory level that we saw last year. A lot of the predictions out there in the market, the forecast, if you will, is that nationwide inventory is going to be somewhere over 900,000 homes, which again is a big increase over what we've seen the last couple of years, but still well below the pre-pandemic levels. So with that said, inventory is increasing nationwide, but here's something really important to know. Currently, at the time I'm filming this video, 30% of the homes, 30% of the 656,000 single family homes that are on the market at the moment are concentrated in just Texas and Florida. So just two states hold 30% of the inventory. And really, those are the markets where we've seen inventory climb back to those pre-pandemic levels, back to levels prior to 2019. And the reason this is important is because those are also the markets where prices are flattening. We've seen price decreases in those markets. And a lot of it has to do with not only those markets rising a lot during the pandemic, right? Those markets saw a huge increase in prices because of all the influx from different states, people being able to work from home, etc. But also they're now seeing issues with insurance, property taxes, HOA issues. So a lot of these states where we're seeing inventory rise is not because people don't want to buy homes there. It's because of financing issues. It's because people are worried about what's coming next. You know, inventory is growing. People don't want to catch a falling knife. So they're worried about home prices coming down. And at the same time, affordability is a factor there, with insurance costs rising dramatically over the last couple of years due to natural disasters. And on top of that, like I said, HOA issues. A lot of these condo complexes in Florida are having big assessments to the homeowners of those communities because they have to take care of projects. Because of the building collapse in South Florida, a lot of the laws changed around HOAs, and these HOAs now have certain things that they are required to do, certain reserve requirements that they're supposed to have when they're an HOA. And a lot of these complexes don't have it. So they're having to raise these HOA dues in order to create these reserve accounts, in order to fix the problems with these buildings. And because of that, a lot of buyers don't want to buy these properties. Therefore, inventory is growing. So that's what's happening nationwide. So that means once you factor out those two states, taking away 30% of that inventory, you only have about 460,000 single family homes on the market in the other 48 states combined. Now, there are a couple of other states in there where inventory has grown back to 2019 levels, but all combined, I believe there's only about 10 metros, if you will, that are back to those 2019 levels. So now that you know what's happening nationwide, let's talk about what's happening here in Orange County. Orange County, inventory's up about 11% in the last 2 weeks, with 3,570 homes sitting on the market at the time I'm filming this video. Now, something to keep in mind with that number, that not only includes single family homes, that also includes condos, townhomes, properties that are in senior communities, properties that are on leased land. It includes luxury properties. It includes everything. So out of a county of 3.3 million people, we just have only 3,500 or so homes on the market. And if you've been paying attention at all, we've actually seen interest rates come down from just over 7% at the beginning of the year to somewhere between 6.5 and 6.7%, depending on the type of loan you're getting. So interest rates have dropped about 0.5%. And because of that, we've seen demand increase about 6%, which is the highest level that we've seen since May of last year. So as I started the video and said, inventory is growing, buyer demand is growing, rates are kind of bouncing all over the place. So what does that actually mean for you as a buyer out there? What does that mean for you as a seller out there? Well, that's exactly what I'm going to talk about right after you hit that thumbs up if you find any value in my videos at all. And if you're somebody that's considering selling a home here in Orange County and you want to stay updated on market updates, you want to stay up to date on things that you can do in order to improve your price, do me a favor and consider subscribing to the channel. So speaking of sellers, I want to start there. If you're currently a seller out there in the market, you need to understand that it is a more balanced market this year than it's been over the last couple of years. It is still in favor of sellers. So if you're a seller out there and you have a home, I would say priced under $2 million and it's priced correctly based on comps in the market, I think you still have a market that's really in favor of you. But at the same time, understand that it's taking a little bit longer right now for homes to sell. And the reason for that is a couple of different factors. One is seasonality, right? It's the beginning of the year. It's the start of the spring market. We haven't really fully kicked into the spring market yet where homes are selling super quick and, going over the asking price and what have you. Now that can happen on occasion, but understand the average market time at the moment is about 62 days on market, which means from the time a home goes on the market until it goes under contract is about 62 days. Now that doesn't mean you can't sell your home immediately. You can't sell it the first weekend because that does happen. But also understand there are homes that sit on the market for 100, 200, 300 days in some cases, especially at the higher end price points, which brings that average up to 62 days. I think if you're under $2 million, the average time on the market's probably between 30 and 40 days in most cases. But even then, that doesn't mean you can go out and shoot for the moon. And the main reason for that is affordability is still a factor. There's a lot of people still on the sidelines that are potential buyers that aren't willing to pull the trigger yet just because of where interest rates are. There's some uncertainty with the economy. If you've ever heard the term the wealth effect, right? When the stock market does really well, when the economy is really pumping out, they feel better about buying large purchases, things like homes and cars and what have you. And at the moment, we've had a lot of volatility in the stock market, which in turn is having an impact on that wealth effect, which is making buyers question whether or not right now is the right time to make a large purchase like this. But even with that said, there are buyers sitting on the fence, not only waiting for the right home, they're waiting for rates to come down a little bit, affordability to improve, which I do think is going to happen over the next couple of months. I believe we're going to see more of a softer economy out there. And with that, I do think interest rates are going to come down, improving affordability. But I don't think waiting to sell your home is necessarily going to net you more money. I think you're going to see more flattening of prices. I think more homes are going to come on the market this spring than we've seen in the last couple of years, which means at the moment you might be the only home in your neighborhood on the market. But that might change in a couple of days or a couple of weeks. You're likely going to see more and more homes come on the market as the spring continues. And while 78% of U.S. homeowners have an interest rate below 5%, I do believe that there's a lot of people currently with interest rates below 5%. Those homeowners that are willing to sell their home and take a higher rate. There are people living in their homes for the last couple of years that haven't been happy with their property. Maybe they bought the wrong property to start with, or maybe they outgrew it. They had some sort of life change. And now they've been wanting to sell that home, but they haven't been willing to do it because of interest rates, right? Interest rates have been so low and the jump has just been too much for them to take in. So they've been sitting on the sidelines. Well, I think people have gotten to a point now where they're like, you know what? My life and the higher payment is not necessarily something I want to do, but I have to do it because this house no longer works. I'm tired of being in this property. So I think you're going to see more and more people that have lower interest rates willing to give them up as interest rates come down. Now, what the magic number is, I don't know, but I think if you see interest rates below 6%, with a 5 handle on it, it's going to start to unlock more and more inventory. And as more and more inventory unlocks, that means more competition for sellers. And I know what you're thinking, well, that probably means prices are going to jump. I think home prices are going to continue to appreciate somewhere around the rate of inflation, say 2 to 4%, if you will, which means you're not going to see a huge jump in your price by waiting months to put it on the market. In fact, you could end up hurting yourself in some ways because now you have competition. Now buyers have a choice of which property they want to go with in a neighborhood. neighborhood. So just make sure as a seller out there, not only are you working with a professional agent like myself, but you're doing your due diligence, you're looking at comps, because the last thing you want to do as a seller is put your home on the market at the wrong price. Because by putting it on at the wrong price, a lot of times you end up accepting less money than you would have if you had just priced it right to begin with. I know the idea as a seller is I'll just put it on the market at a higher price, and if it doesn't sell, I'll just bring the price down. That's one approach. But what I can tell you based on experience is those people that do it that way end up netting less money than the people that just put it on the market at the right price to start with. So that's my advice for sellers. On the buy side, understand there's a lot of buyers out there in the market just like you. They've been waiting to get in the market because they've been waiting for inventory to grow, right? They've just been waiting for the right home to come on the market. But at the same time, they've been waiting for affordability to improve. And I can say this because I have clients that have been sitting on the fence. Now that interest rates are coming in, we're starting to chat more. They're starting to get back in the market. They want to see homes. In fact, I just had a client this week send me a list of properties that they want to see on Sunday. The time I'm filming this video is on a Friday. They sent me 5 homes. Of the 5 they sent me, we can only see 2 of them because 3 of the 5 that just came on the market this week already have offers on them. They're already going into contract before the weekend even starts, which tells me that buyer demand is back. Now, in this particular case, this is a lower end price point for Orange County. These homes are under $700,000. But at the same time, I have a property that I just listed this week that's at $1.65 million that we're not allowing any showings until this weekend's open house. And I already have agents reaching out to me trying to get in there before the open house. They want to show their client the property. So that shows me that buyer demand is out there. So if you're watching the national news and you hear that home prices are falling or the inventory is growing, make sure you understand what market they're talking about. They're typically talking nationwide. They're not talking specifically about, say, Orange County or where you're looking specifically in Huntington Beach. At the same time, if you're a buyer, make sure you're pre-approved. Make sure you've already gone through that pre-approval process so that if you find the right home, you're in a position to make an offer, because a lot of the properties that you're going to like are the same properties that other people are going to like, right? A lot of people have the same taste. They're looking for the same style properties because everybody's been watching the same TV shows over the last couple of years. Therefore, the taste is very much the same. And the homes that are staged properly, that show well, that are priced correctly, tend to get the most activity. They tend to get the most showings, which in turn means the most offers. I just wrote an offer for a client a week and a half ago, and there were over 20 offers on that property. And my client wrote it $50,000 above the asking price. But with that said, we weren't even a callback when I talked to the agent because there were 11 offers that went $30,000 plus higher than us, which means they went over $80,000 to $100,000 over the asking price. Now, I don't want to say that to dissuade you from making an offer or push you out of the market. It's just the reality of what's happening out there. And you shouldn't be buying a home just to be buying a home. You should be buying because it's the right time in your life. You've got stable employment, you've got financial stability, you've got relationship stability, and you plan to be in that home for, say, the next 5+ years. Now, at the same time, if I'm a buyer out there looking at the moment, my suggestion is to look at the properties that aren't quite as cute, that aren't staged as well, the homes that have been sitting on the market a little bit longer, that have had some price cuts. Because in my opinion, those homes typically have the best bang for your buck when it comes to real estate. You've probably heard the saying, you want to buy the worst house in the best neighborhood versus the most expensive house in the nicest neighborhood. And that's because you can do improvements to create value in that home over time, which means you need to find a home that you can live in and do these improvements over time. The properties that need the full gut, that need a full remodel, the properties that are, say, fix and flip type properties, those properties are getting a lot of attention from investors. That's exactly what investors are trying to do. And at the moment, flippers in California represent 3.3% of buyers out there in the market. So just understand that could be your competition if a property needs a lot of work. Now, what they're not looking at is nicely remodeled properties that are selling at the upper end of the price points in their neighborhoods. Flippers aren't interested in those. In those situations, you're typically competing against buyers like yourself in many cases. But at the same time, there's still a lot of cash out there in the market. There's still a lot of people that were able to capitalize on selling a property, taking that money and buying something else. Now, maybe they're not a full cash buyer, but a lot of buyers out there have large down payments. So when you're writing offers, you just have to make sure you're structuring the offer to make your offer present the best way possible. And I don't mean you need to waive all the contingencies, but you do need to have an agent that can guide you through that process to tell you all the little things that you can do as a potential buyer to put your offer in the top. And here's what I would say about cash. You shouldn't be scared of cash offers. A lot of cash buyers out there feel like they have an edge in the market. They feel like, because they're coming in with cash, that they should get some sort of deal on the property. And the reality is most sellers don't care whether the offer is cash or not, at least if they're educated properly, right? Because at the end of the day, the money's still the same. They can't take cash home and put it in their safe, right? They're going to get a wire. So it doesn't matter if it's coming from a loan or if it's coming from cash. What matters to the seller is the full picture when looking at an offer. So you just need to make sure you're doing all the things that you can do in order to make your offer stand out. Going back to sellers, understand that in this market, a lot of buyers out there are going to write strong offers, but they're also going to ask that you're also paying their buyer's agent compensation in that offer. And what I'm seeing out there is most sellers are still willing to pay buyer's agent compensation. A lot of times it's being negotiated, but I would say the large majority of the time I'm seeing sellers continue to pay it, which means as a buyer out there, it's not really something that you should be worrying about because you just build it into the offer. And if the seller's not willing to pay it, then you can either negotiate that or you can move on to another home in the same neighborhood that may be willing to pay it. And at the same time, if I'm a buyer out there in the market, understand that sellers aren't giving away properties, right? The housing market isn't crashing. Even though you may think prices are high, they can't go any higher, the reality is home prices are likely going to continue going up here in Southern California just because of the lack of supply. Home prices have grown 8.6 annually here over the last 10 years in California. And that's why California has 15 of the top 25 most expensive cities and 70% of the highest priced zip codes. But at the end of the day, it all comes down to supply and demand. And at the moment, 230 of the 309 largest U.S. metros have a housing shortage, which means there are more buyers out there than there are the number of homes to sell those people, which means home prices likely aren't going down. So regardless of which side of this equation you're on, if you do your homework, you have the right agent on your side who can negotiate strongly on your behalf, you're going to put yourself in the best position to take advantage of this market. Now with that, if you are a seller out there in the market and you're looking how to best position yourself in a shifting market, do me a favor and check out this video here.